A lot of buyers today are sitting on the sidelines waiting for the market to collapse. They're hoping that if they wait long enough, prices will fall, bargains will appear, and the right opportunity will suddenly make itself obvious. Now, here's the problem with that. There's very little evidence right now that we're headed for some sort of dramatic collapse in homes values. Yes, the market has softened. Has it changed? Without question. But a collapse? I'm sorry. I just don't see the evidence. And in my opinion, many buyers are focusing on the wrong thing. Because before price, there are two things buyers should really be paying very close attention to. Number one, and if I say number one, probably the most important. Number one is the cost of money. And number two is knowing your numbers. And if you get those two things right, you put yourself in a much stronger position to buy wisely in absolutely any market. Hi, I'm Frank Spencer, Mr. Chatsworth. And on this channel, we talk a lot about real estate lifestyle and what's happening here in Chatsworth and in the surrounding valley communities. If that kind of content is helpful to you, please make sure to like, subscribe, and ring the bell so you don't miss any upcoming videos. A lot of buyers I talk to today tell me the same thing. We're waiting for the market to collapse. And I understand the thinking. If prices fall dramatically, the dream is that buyers can step in and get a much better deal. But real estate, well, it usually just doesn't work that way. Because while buyers are watching price, what they often should be watching even more closely is the cost of money. That means interest rates. And that matters because we don't live in a world of cash purchases and abstract home values. We live in a world of monthly payments. That's how most people experience home ownership. Not as a spreadsheet, and certainly not as a headline, but as a payment due every single month. And why interest rates matter so much? Well, it's often said that for every 1 point drop in interest rates, a buyer gains roughly $100,000 in buying power. Whether that exact number shifts depending on loan size and scenario, the principle's true. And when rates come down, buying power rises. When rates go up, buying power shrinks. And that can change the home you can afford far more quickly than many buyers realize. So if a buyer is sitting around waiting for prices to fall, but rates remain high or even rise, that buyer may not be gaining nearly as much ground as they think. In some cases, they may not gain anything at all. Or worse yet, they may lose buying power while waiting. That's why I believe buyers need to stop looking at price only and start looking more seriously at payment. We live in a world of monthly payments, and this is one of the most important truths in real estate. People do not only buy homes based on price, they buy homes based on what they can afford to pay each month. And that's the real battlefield because your mortgage payment affects your life every single month. It affects your comfort, your flexibility, your stress level, and your ability to handle the unexpected. And without question, your ability to stay in the home when the market changes. And that's why I say buyers should not begin with how cheap can I get the house. What they should begin with is what payment can I comfortably afford? That's a much smarter question. And the second issue, know your numbers. And that brings me to the second thing buyers need to focus on. You absolutely have to know your numbers. Not your hopeful numbers, not your best case numbers, not the numbers that work only if everything goes perfectly, your real numbers. What can you reasonably afford to pay each month? In a strong economy, in a slowing economy, when expected costs go up, when life gets more expensive? and when you need a repair or something doesn't go according to plan. Because markets change and home values go up and down over time. That's normal. But your ability to make payments is what determines whether you can ride out those changes without causing panic. And that's where many buyers get themselves into trouble. They buy to the edge. They assume the future will cooperate, and when the market shifts or life shifts, they discover that the payment was never really comfortable to begin with. Why payment matters more than short-term home value movement? Let me be clear. Home values matter. Of course it matters. But value is fluid, and it'll rise and fall over the years that you own your home. That's the nature of real estate. So if you buy a home and the market softens for a while, that doesn't automatically mean you made a bad decision. What matters most is whether you bought a home that you could truly afford to keep. Because there's never a bad time to buy if you can comfortably afford the payment. But there can be some really bad times to sell if you can't. And that's the distinction buyers need to understand. If you're forced to sell because the payment is too much, that's where trouble begins. And that's where people lose flexibility. And that's where they lose options. And that's where short-term market movement suddenly matters a whole lot more than it otherwise would. What smart buyers should do instead? Well, first, stop waiting for some dramatic collapse unless you have real evidence to support that belief. Hope isn't a strategy. Figure out what monthly payment feels comfortable, what monthly payment still works if life gets harder, and what cash reserves you want to keep and how much breathing room you need. Third, work backwards from that number, not from the biggest number a lender says you can qualify for, but from the number that lets you sleep at night, because qualifying is not the same thing as being comfortable, and comfortable is what matters. So the big takeaway here, if there's one thing I want buyers to get from this, it's don't build your home buying strategy around hope for cash. Build it around your payment comfort level today and your real financial capacity, because price matters, yes, but payment determines whether you can hold the property long enough for the market to do what markets always do over time, and that's move. Some years up, some years down, and over the long haul, hopefully in your favor, but only if you're still there to benefit from it. So before you ask, should I wait for prices to fall? Ask yourself two better questions. What does money cost me right now? And what can I truly afford to pay every month in a good economy or bad one? Because those two answers will tell you far more about whether you're ready to buy than any headline ever will. Now, if you found this helpful and you care about making smart real estate decisions here in the greater Chatsworth and San Fernando Valley area, please make sure to like, subscribe, and ring the bell. And if you're thinking about buying or selling and you want help making sense of your numbers and your options, drop your questions in the comments. I promise you, I read every one. And until next time, I'll see you around the neighborhood.